Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news that the US Treasury 210 bond yield curve has inverted but has now gone positive again just recently. And that is usually an early warning signal that the US faces recession, in bond investors' minds anyway. But equity investors are shrugging off the risk with gains in most markets around the world today. The widely watched Conference Board survey of American consumer sentiment reported mixed signals, although perhaps supporting the bond signal. The present situation view brightened in March, but the forward-looking expectations view went the other way. And the uptick in the present situation is bolstered by firming of retail sales in the latest report for America last week. And in a further sign they are feeling confident at the moment, Americans continued to switch jobs at near record rates in February, with 4.4 million workers leaving their positions in a historically tight labour market. Employers hired 6.7 million people in the month, while reporting 11.3 million job openings. The war in Ukraine has collapsed German consumer confidence, however. The GfK Consumer Climate Indicator fell to minus 15 on their index, the lowest since February 2021, and compared to a minus 14 in the previous month. And the World Bank is warning that emerging markets, which account for 40% of global GDP, are under real debt stress, and an outsized set of them are likely to be in distress soon. In China, they're rolling out direct stimulus and business support at the local level to hold their stuttering economy on an even keel. But Australia delivered another impressive retail sales result yesterday, beating forecasts that assumed storms and the pandemic would hold them back. And the 2022-23 Australian budget was delivered overnight, and it was a traditional election budget, delivering $40 billion of new spending and tax cuts over the next 5 years, most of which will be in the immediate year ahead. And this will juice up their local demand further, even though they're in a strong position at present. And in turn, that probably brings forward the RBA's rate hikes and ensures they will be larger than otherwise. The US Treasury 10-year yield opens today at 2.39% and down a further 8 basis points from this time yesterday. And the price of gold starts today at $1,915 an ounce, and that's down $24 from this time yesterday. And oil prices are down another sharpish $4.50 to just over $102 a barrel in the US, while the international Brent price is now $106.50 a barrel. And the Kiwi dollar will open today a little firmer than this time yesterday at 69.2 US cents. Against the Australian dollar, we're also similarly firm at 92.3 Australian cents, but against the euro, we're softer at 62.4 euro cents. That all means our trade weight index starts today still just on 74.4. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.